All right, welcome to this video about farm management. Now here is an example farm. And in this farm, of course, when we say farm management, what I'm really talking about in my topic here is farm business management. So this is our farm operation. It's going to be managed by water and all the other resources and the land that it takes to produce the commodities. It's going to be managed in its human capital as far as those that are running the business and managing it. It'll be managed in lots of other ways, but I'm talking about farm, and I should say business management in our concepts. What we're doing is we're going to take this farm and we are going to try to, from a business standpoint, describe how this farm operates. Now, when I say a business standpoint, what I mean is I mean our business assets. These business assets are things that we own and we need to operate this business. So tractors and, well, in fact, let's back up. Money, the bank account, the money that we need. It's going to be tractors and buildings and the land itself. Those are the assets that we own. And to run this operation, we need these assets. Now, we acquire these assets from a couple of ways. In fact, we could say that our assets equal our liabilities. And that's a term that we want to introduce to. This is going to be the debt that we owe. So this would be loans. Because to get these assets, like our farm, we might have to actually borrow money. Meaning that we need the farm, and let's say it's worth $1 million and we try to buy the farm, if that was the case. Well, it's a $1 million farm and we have $200,000 to buy it. We need $800,000 more dollars. That might come from a loan so that we can acquire this farm. Now, we had some of the money, but we borrowed the rest. Now, not only are the assets that we own important and we may borrow that money, but what do you call it when you already have the money or you have other people that are investing on your behalf? That is going to be something called equity. And that is the amount that we either have invested personally, so I'm going to say invested money, or it's the money that we have retained from earnings, meaning that we've already had it. So the money that we already have earned or the money that we've invested in our business, that creates what we call the business management part of this farm. Now, this is basically a financial structure of our business. In fact, everything I just laid out here is actually called, let me go ahead and label it, it is called in business the balance sheet. So that is what this is called. This is our balance sheet. Assets, things we own from a business standpoint, are farm. Liabilities may be the money we had to borrow to get this farm or any of the other assets, the tractors, the equipment, the land, the buildings, the machinery, anything we need to operate, the supplies that we need to buy to plant the crop. And then finally, it also represents equity in our business that we already have or we've been earning the money over time. So that's kind of the balance sheet, and that's really an introduction to the business part. Here's our farm, but here's how the business world would structure that farm. And then we call that a balance sheet because that's a financial statement that we produce all the time. A summary of the assets, summary of the liabilities, and summary of the equity. And all three of those put together equal to what's called the balance sheet. And they represent the financial picture of the farm. Now, in farm management, how do we manage this balance sheet? Well, that is something called, and I'm going to change colors a bit just to keep it different. That is something I wanted to introduce to you today called the chart of accounts. Now, the chart of accounts is how we actually organize the books. So how do you manage the balance sheet, which runs the farm here? How do you manage the balance sheet? You really manage something called a chart of accounts, and that's really our accounting of our business. And then from here, we're going to talk about how we enter the accounting entries, how our records are done. But before we even talk about that, we ought to talk about, again, the balance sheet represents the farm, and then these items are organized into a chart of accounts, which is really what we use. So a chart of accounts is going to be a detailed listing of all of the assets that we have, all the liabilities that we have, and all of the equity that we have. And so I'm going to continue over and come across. Chart of accounts is organized very much like the balance sheet is. It sometimes starts with, so what are your asset categories? And I'm going to put a few of these categories that would be common. So a chart of accounts is going to start off with usually things like a bank account. So a bank account would be like your checking, savings. You could have both checking and savings. You could have multiple checking accounts. So really it's just the chart of accounts. The chart of accounts is going to start, with your bank accounts. That's your first asset that you typically have. After that, the chart of accounts is going to have an account that's probably going to represent things that are major assets, like, for example, the land for our farm. That is an asset. Maybe you could have all the equipment listed. That would be an asset. Those are just good examples. There would be a lot more. You could have another set of items that is inventory. Now, inventory usually needs to get specific, so I'm going to say inventory for like the hay crop that we've harvested and not sold. So these would be examples, and all these are examples, by the way. There could be a lot more of these listed, but your chart of accounts is going to start usually with asset listings. All right, after that, the chart of accounts is going to change gears, and I'm going to change colors, but the chart of account is going to move into liabilities. And so let's say that we had a land note. That land note would be listed. Let's say that we had an equipment loan. So that would be listed as well. So your liabilities are going to get listed one by one, and then we would have those laid out. Once again, this is a chart of accounts. So when you actually make your financial entries, let's say someone comes to our farm and they actually want to buy some grain from us to feed their hogs. So they come with a trailer, we load their grain into some carrying cases that they have for it, and we charge them by the pound, just as a simple example. If they hand you money, then that money needs to get put into your bank account to represent your business. And so that chart of account is where that money would go, into that bank account. Now, as we make transactions, these are our transactions of record. So let's keep going through to some other ones. What about the equity accounts? Well, those are listed as well. If we keep going for the equity accounts, let's start one with investor capital. Now, investor capital is going to be an account that represents maybe the money we've put into the business ourselves. Hopefully that's what we have, is a large ownership in our farm. But if we actually have other people that are investing in our farm, their money would get recognized there as well. So we didn't borrow the money from them, they were an investor. So it's a separate chart of account. What if you got some money from the bank, so you had to pay it back? What if you got some money from the bank to buy a piece of equipment? That's where you would have an equipment loan come from. So that's where that loan would be recognized. So all of this chart of accounts is doing is giving us a little bit more detailed list of our balance sheet. Now, if I keep going down through my balance sheet, I've got this thing called retained earnings, and that gets a little complicated, but there are several chart of accounts that connect to retained earnings. Because retained earnings is the money that we've earned. I'm going to go back and write on that. So again, be an active learner and you do the same thing. That's the money that we've earned. Take notes. All right, let's go over here and talk about what chart of accounts would represent retained earnings. Well, earnings means like net income. So let's start off. Our chart of accounts would have things like sales of our crops. Maybe it would also be sales of our livestock. So that would be an example of a chart of account that represents our income, so the money that we make. Now, these two are ways we might earn our money. What about spending of money? Well, let's see, we could look at seed. We could look at another one for fertilizer. So we would have several expenses. Probably feed would be another one. So these are going to be the expense accounts that we have that help us earn this income. And so a chart of accounts, once again, to review, is a detailed listing, like by the account. There could be a lot of these. For example, on equipment, there might be an account for your John Deere 3540 or 6540, John Deere tractor. There could be another line for a baler. There could be another line for a rake. There could be another line for a John Deere skid loader. There could be another line for another piece of equipment. So you would have several different chart of accounts for different equipment because each of those has a different cost, has a different life, and we'll talk more about that later, but they have their own details. So each one of these accounts, bank accounts, there might be 3 or 4 different bank accounts. Come through here, there might be one land note. Maybe that gets it. Come through here, there might be, I have 2 income categories. Maybe there's more than that. Maybe you have equipment rental. Maybe you have land lease. You have lots of others. If you keep going through here, there are lots of expenses: seed, fertilizer, feed. We would have others. Probably one I meant to put that I skipped would be fuel. Now, these chart of accounts would be my first area to you to talk about. In business management, I need a good organized list of chart of accounts. That chart of accounts I have, really, it is just a subset of the balance sheet, which a balance sheet is a main financial statement that summarizes, this is all the assets that I own in dollars. This is all the liabilities or the debts I owe, and this is all the equity that I have developed. The last thing to talk about is how all of this ties together. The assets that you own, let's just say it is a example here. Let me bring in another color to help us. So in your notes, let's do an example of a balance sheet. Because the last thing about the balance sheet is that all of these chart of accounts, these detailed, the money that comes in fact, let's do an example. Let's just say that our business has completely zero. We don't have any money anywhere at all. We're just getting started. Our farm is something we haven't even gotten to yet. So let's say that we did have something we wanted to sell. And let's say that we sold it for $100. That $100 would go into your bank account. So if I put $100 right here in my bank account, that's what goes in. However, it's not going to stop there because your assets, if you come down here, assets, if you follow along, would equal $100. Well, this is called a balance sheet for a reason because our business always has to balance. Every transaction we make has an alternate set of transactions that always exist. So for example, if you had $100 in your bank account, then that would be the one side of the transaction. You put it in the bank account. The question is, where did it come from? Well, if I keep going down the list, was it a loan? No, I sold some, let's say sold some grain. So I didn't borrow it. If I keep going down, no investor gave it to me. It was the sale of a crop. So I also put the $100 right there as well. And so now I've got $100 in the bank and $100 from my sale of capital. So if I go through here and look at the balance sheet, just as we talked about here, your assets are always equal to your liabilities, which at this time, our liabilities are zero. I didn't borrow any money. Plus your equity, which in this case is equal to $100 because that's what I sold my crop for. So does your balance sheet balance? Yes. Our assets of $100 equal our liabilities and our equity of $100. And that is the formation, or that is an introduction to record keeping. It all goes back to the farm that we own. We manage it in lots of ways. But one of those ways is business management. And business management means that we need a good summary of the assets that we own, any debts that we have to pay back, and then finally any earnings or investment money that we have that got these assets created. So in our case, in my example, I sold a crop for $100. That means I have an asset of $100. I put the money in the bank. That's perfect. Or I put it in my pocket. Either one. I still have $100 in my asset cash category. And I have to have an opposite transaction to help show me where that went or where that came from. And I would jump down and say that came from my sales, which actually fits right into this area of equity. And that's how our balance sheet balances. So as we move into our next set of videos, it's going to be more about these chart of accounts. How money goes in, how money comes out, how is all of that really managed? But before we get into those details, it's important to just get the concept of how is the financial business part of the farm managed, and it's managed through what we call a core report, a balance sheet. But a balance sheet is managed through a chart of accounts. So hopefully this video helps you better understand this basic concept of a chart of accounts and managing our farm business account. Thanks.